Good afternoon, ladies and gentlemen. Welcome to the Seed Innovations 2022 Annual General Meeting. Throughout this recorded meeting, attendees will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it is appropriate to do so. I'd now like to hand over to Chairman Ian Burns. Good afternoon, sir.
Good afternoon. Ladies and gentlemen, welcome you to the annual general meeting of the holders of shares in the company. The quorum for the meeting shall be 2 members present in person or by proxy. As the requisite quorum is present, I declare the meeting open. For those of you who don't know me, I'm Ian Burns, the chairman of the company. And in the room, I also have Ed McDermott, Lance de Jersey and Luke Cairns. In addition, we have Jodie Newark of Obsidian Fund Services, who will act as secretary to the meeting. I'd like to commence the formal proceedings of this meeting. I can confirm that we have received votes representing 4.08% of the issued share capital. After we've put the resolution to the meeting on a vote by way of a show of hands, we will inform you of the proxy count. The notice covering the meeting was sent to you on the 11th of August 2022. I would like your permission to take the notice as read. Is this agreed? Okay. I'd like to propose the following resolution as an ordinary resolution. Ordinary Resolution 1, to accept the reports of the directors and auditors and the audited financial statements for the year ended 31st of March 2022. Any questions? Okay. So those in favour? Okay. Those against? I therefore declare the ordinary resolution carried by the necessary majority based on the result of the vote on a show of hands. For the record, I should mention that the company has received valid proxies representing as follows: 8,660,109 votes in favour, no votes against, and 110,419 votes withheld. Ordinary Resolution 2, to make market purchases as defined in the law of and cancel ordinary shares of 1p each. Any questions? Okay, so I'll put this to a show of hands. Everybody, anybody in favour? Against? Okay, I declare that resolution passed. Sorry, my computer's just frozen. Just bear with me a second. Okay, I haven't got the votes on there. Oh, yes, I do. Okay, so the votes, the proxy votes were 7,652,429 in favour, 1,107,829 against, and 10,000 withheld. We now move to ordinary resolution number 3, which is to reappoint the auditor and for the directors to agree the auditor's remuneration. I'll now put this resolution to the meeting. Those in favour? Those against? So I declare the ordinary resolution carried by the necessary majority based on the result of the vote of a show of hands. For the record, I should mention that the company has received valid proxies representing 8,558,318 in favour, 35,940 against, and 176,000 withheld. Resolution number 4 is the reappointment of Lance de Jersey as a director. I put this resolution to the meeting. Those in favour? Those against? I therefore declare the ordinary resolution carried by the necessary majority based on the result of the vote on a show of hands. For the record, I should mention that the company has received valid proxies representing 8,237,906 shares in favour, 186,203 shares votes against, and 346,149 shares withheld. Resolution number 5 is to authorise the allotment of shares as detailed in the AGM notice. I'll put this resolution to the meeting. Those in favour? Those against? I therefore declare the ordinary resolution carried by the necessary majority based on the results of the show of hands. For the record, I should mention that the company has received valid proxies representing 8,220,720 shares, votes against 303,538, and votes withheld 246,000. That I think, so I then move to, are there any other questions relating specifically to the AGM matters? No? No. Just to confirm that we will issue an RNS with the results of the voting later on during the course of the day. So that, I think, brings the AGM matters to a conclusion, unless anybody else has any other matters.
No.
Okay, so now we will move on to the investment presentation, which is going to be presented by Ed, Lance and Alfredo. I'd like to thank people who are on the call for submitting questions in advance. That's helped us to frame this presentation, and you will find that many of the answers to questions that you've raised will be incorporated into the presentation. You do have the opportunity, as you know, to add questions. We will look at all the questions, and we will attempt to look at if there are one or two key questions that haven't been addressed in the presentation. We will try to address them briefly, but we will look at all questions and try and get back to people if necessary. One final comment from me is clearly we are restricted by the rules of the stock exchange and market abuse regulations, which does mean that we are limited into what we can say, particularly about events into the future, which may or may not be price sensitive. So that is a frustration. I've written in my chairman's statement before how frustrating that is for us. And I know it's frustrating for some listeners. It's frustrating for us that we can't always share with you all the information which is held privy by the board of directors. So on that, I then hand over to Ed, who I believe is going to start the presentation.
Thank you very much, Ian. Thank you so much. We've actually got a very good attendance list today, and we really appreciate you taking the time to take on board this AGM presentation. I'd really like to thank all our shareholders for being extremely patient through an extremely tough period for all of us. Without wishing to get into a sort of doom and gloomy statement, I think it's very important that we recognise where we are in terms of macro events and all the things that have affected share price performance, net asset value performance, and general sentiment across the market. Liquidity being one of the biggest issues that we're seeing across all equities, but particularly those in the small cap sector. So we've seen a global crash in equities over the last 12 months, almost across the board, regardless of industry. Obviously, there will always be outliers. In the case of the AIM All Share Index, I think it's it's not pretty reading at the moment. But if you look at the tech index, for example, that's down from highs of 14,390s down to 8,500s. And if we look at healthcare, similarly, 11,300s down to 7,600s. And of course, there have been outlier performers in those indices. Unfortunately, Seed has not managed to buck the macro trend, and despite the hard work of the board and I, it's been extremely difficult. Sometimes the saying, you can't fight the tape, is unfortunately true, but this does not mean that we sit idly by and do nothing. We sweat very hard to absolutely try and deliver real returns on the assets that we're invested in. Where our portfolio has been resilient, and I think it's very, very important to outline this, and it's, again, you're very welcome to look at previous RNSs and look at some of the performance of the companies operationally. We're very happy that many of our portfolio assets look very robust, despite the tumultuous market we're experiencing, and thus we think we've been unduly oversold, and I will cover more and more of that as we go through the presentation. You're also going to hear from Lance and you're going to hear from Alfredo. So you're going to have lots of different views on various different asset and indeed industries that we're currently invested in. As I previously mentioned, we've had a global pandemic which has disrupted all our assets to some degree, followed by a war affecting nearly a third of the world's supply chain. And obviously rapidly rising inflation has come as a result of that. This is one of the reasons our Nomad engaged with the board to issue a revaluation of our portfolio and give as clear a guidance as possible on the current net asset value proposition and really bring that forward. Obviously, we work some months behind in terms of the net asset value statements, and we felt with what is going on in the world and some of the clear and obvious impact on our portfolio that it was the right thing to do. One of the other key reasons is our largest asset, Leap Gaming, has had several high-level discussions with potential acquiring parties, which again has led us to a position where we've had to look at valuations and accept to some degree where potential suitors would be in terms of valuation. And at this point in time, we are arriving around that 16 million euro figure, which is extremely disappointing. And had we been in a better position to move more than 12 months ago, things may have been slightly different. But unfortunately, as everybody on this presentation will have seen, stock markets have largely closed up for new growth listings at this point in time. And again, whether you're a company that's producing brilliant revenue, EBITDA, and even keep free cash flow, the multiples paid for these key items has actually come down very significantly. And again, this is another reason why we felt it was absolutely appropriate to give a present NAV calculation. As a board, we've been working extremely hard on all of these assets. We do have a number of legacy assets, which again, I'll cover in due course. But I think, as is crucially important, even with the reduced net asset value, the share price is not representative of where we truly are. With what we believe the current accurate valuation of 8.6p, our share price would have to increase nearly 3 times to get to a sensible level. And again, I think we've been heavily oversold, and we all understand that the market is in a bit of an extreme fear mode. Again, we do not believe that our share price is representative of where the portfolio truly is today. I would go through the disclaimer, but I think in the interest of time, I think it's important to move on to the overview. The purpose of Seed was always to provide investors with an opportunity to get exposure to assets, asset classes, industries that they possibly wouldn't have access to, and in fact, most likely wouldn't have access to, and also provide this on a liquid investment platform, hence our listing on AIM. The nature of these investments, as I said, should be offerings that are not easy to access, and they come via a very experienced board who see great deal flow. Yield is not the purpose of this fund. Just to reiterate, I think sometimes there may be confusion about this, and we have never labelled ourselves as a yield-generating fund. Our sole interest at this point in time is capital growth. It should be noted, as I said, that there are a lot of legacy assets which received investments before the current board's tenure, and these assets include Leap, Yuma, Invenium, formerly Factum, Vimo, and some others that have previously been sold. We do take the responsibility of all the assets, regardless of when the investment was made, very, very seriously, and it is very much our responsibility to dispose of the assets for the best possible price, while balancing the high-risk nature of what we do. In terms of key data, it's absolutely not been pretty. I am pleased to say that our largest shareholder group, representing about 25% of the company, are all committed and see a positive future for the fund. And at this point in time, outside of our largest asset by percentage and net asset value, which is Leap, we have about £11.8 million of value outside of that. If you look at that in terms of our market cap today, That's it's more than 5p a share that's dedicated to just assets outside of LEAP. So that's a very important point to distinguish. In terms of the team, we've got a very experienced board across a number of different skill sets, and rather than go through and give a specific piece on all of them, I think it's fair to say that we've got very strong finance backgrounds with a lot of accountancy skill set, a lot of governance skill set, and of course, in just over a year ago, we took on Alfredo, who's been an integral part of the team, is currently on doing his level 2 CFA, so he will have fund manager qualifications in due course. No pressure, Alfredo. Moving on to our investment approach, as I've said, it is about finding assets that our investors would not normally have access to, and that can sometimes be public companies, which we will have access to a placing where perhaps they may not, but more often than not, our business has been about finding private assets at an early stage, developing those companies, working very closely with the management. Sometimes these assets are not huge investments, and we see them as quite opportunistic, and sometimes they are more significant. At any one time, we can only have a certain number of significant investments, partly because of capital, but also because when we make an investment, certainly as this new board tenure, we want to make sure that we are absolutely on top of those companies and that we can really add our skill sets to them and have the time to do so. We are very strong with our views, but we're also flexible and nimble and able to get ahead of emerging trends. Some good examples of that are cannabis and cell agriculture. Into our portfolio overview. At the moment, we have 3 different verticals of investment activity. We have 6 investments in the cannabis and cannabinoid wellness space. I'm actually going to have Alfredo talk specifically about these assets as we move forward in the presentation. We also have 3 in the life sciences and biotech sector, most notably our recent investment in Clean Food Group. And then we have 3 in the tech and fintech space. As I said previously, our current net asset value would give us around an 8.6p a share, of which 5 of these is geared towards 11 of those investments. In terms of the balance of the fund at the moment, I think it's important to give a little bit of understanding as to why we are invested in the things we are and for what reasons. One of the key reasons a few years ago was our shareholders called for us to have more investment in liquid stocks. So people wanted to be able to essentially calculate the net asset value on a day-to-day mark-to-market basis. We duly undertook a review, and we really have driven as many of our portfolio companies in this direction. Obviously, with the markets as they currently are, that has put a very difficult position for a lot of these companies that were pursuing potential IPOs, RTOs, and public listing strategies. But it certainly does not mean that they're not good companies, and we agree with what they're doing in postponing those plans. We've taken part in a number of quoted company placings since this board came into, and some of those have been disposed of fairly quickly, so you won't see them feature in this presentation. I'm actually going to, as I said, let Alfredo cover specifically the cannabis companies, and I will cover all our assets bar those in the cannabis and cannabinoid wellness space, and I will also be leaving LEAP till last. So I'll start with Portage. Portage was an investment that was previously made in Intensity Therapeutics, which was an intratumoral drug injection, which effectively we decided that we had a lot of risk in holding a private asset, a very, very promising company that had very, very good results. But again, at the behest of our shareholders, we wanted to make sure that we found a way to create some liquidity around that. And at that point, we vended this company, Intensity therapeutics into Portage in exchange for equity in Portage, which is now listed on NASDAQ and was previously listed on the TSX. It's been a success story for Seed, with highs of about $40 for Portage. Apologies. We received our stock at around $10, so it's been a very strong investment in that respect. We of course have sold some at lower prices than $40, but at this point it's a nice, relatively liquid asset for us to hang on to. It's a non-core asset, currently worth about £250,000 to Seed Innovations, but one that we take opportunity when the opportunity is there to dispose of that asset. If we move into some of our pre-liquidity assets on the next slide, you'll see Cytec and Southwest Brands. These are two examples which I'll let Alfredo cover later on, but it's worth mentioning that both companies were looking at public listings, and in both cases they have decided not to pursue those. Cytec going all the way down the road with a potential RTO, but the market was just not right for that place. We've got 5 of our current assets that were looking at IPOs and have gone some way down the road to achieving that. But as I said, they've all either been somewhat forced to stay private or have elected to make the decision to stay private, and it's a decision we agree with. But just to give some idea of these companies, it was Cytec, Southwest Brands, Leap, Juvenescence, and Northern Leaf that have all elected not to pursue public listings at this time. If we move on to Juvenescence, I think the prospect of living better for longer, and living longer indeed, is a very palatable and interesting opportunity. Juvenescence had a great deal of success in raising money. It's got a lot of very interesting investors on board, and it's in a very strong position from a cash perspective. We had hoped to see an IPO during the course of 2022, but as we're all very aware of now, market conditions have delayed this. We currently value the asset still at over 2.7 million pounds, and we've seen no reason to adjust that value because ultimately there's still a lot of interest in the company, and the thematic place that it's operating is a very strong one still, and one that we believe is going to come back very strongly when markets start to open up a little bit. In terms of Vimo, which is our educational technology business, unfortunately US politics have made things very, very difficult in that space. Ultimately, Vimo was all about something called an ISA, not as we know it here in the UK, but an income sharing agreement where they were effectively allowing students to fund their education with the promise of sharing their income back with that loan provider in the future. Unfortunately, left-wing politics in the US has made this very difficult. It was a promising business. We're pleased to say that we did manage to take a number of shares off the table with Vimo over a year ago now, and had we been able to, we probably would have sold more, quite honestly, but it does look like it's not a pretty picture for Vimo Education at this point in time, and as such we have it at $0 on our net asset value statement at the moment. The Clean Food Group is a new business that I have been quite involved in setting up. Cell agriculture is the future of proteins. As many of you will have seen, agronomics, I suspect most of you are familiar with the stock market. Agronomics has been probably the most successful player in Europe in terms of investing in that space around clean meat, clean fish proteins, and then of course micro proteins themselves. Particularly in the case of Clean Food Group, we felt we had a real opportunity around the ingredient space, and as such, palm oil was something that there was a technology that was able to effectively create a bioequivalent product in the lab. And as everyone will have read, no doubt at some point, palm oil is in just about every product you consume in the morning before you go to work, and often before you go to bed at night, and in lunch and everything else. So it really does have a very wide use case, both in cosmetics and also in the human ingestible foods, I should say. This was something that perhaps hadn't happened very well historically with seed, but we wanted to make sure that seed had ground level investment, i.e. founder level investment. And as a result of that, the second tranche of investment that Clean Food Group received saw a 10 times return on paper, albeit of seed's original investment. So we feel very good about what's going on with Clean Food Group, and we think it's going to be a massive one for the future. At this point, I'm going to cover Leap. Obviously, there's been a lot of conjecture recently about Leap, and I think it's really important that we address this and give it the appropriate time. As I said previously, it's a legacy investment. We've spent a lot of time, nearly 2 years now, just in terms of getting the company ready, prepared for a public listing. And we had big hope for Leaps. As has previously been communicated a number of times, gaming was a really hot market, particularly during COVID. It really became a strong place to be. And Leap had relatively good growing revenue, certainly very good through COVID, not so good post-COVID. And it had achieved a number of key licenses. An IPO was obviously a very real prospect, and it also served as a very big leverage point for us to attract buyers for Leap. And I'll come back to the reason why we always wanted to ideally dispose of Leap in a sale rather than go down the IPO route. We had to be prepared to go down the IPO route, and all that work has been done to the point of actually raising capital and having that business ready to go before the markets unfortunately caved in on us. When we took over and became actively involved in Leap, and particularly Lance de Jersey and myself have been working much of our week on Leap over the last few years. We had no audited accounts, we had a cash burn on the working capital, a very complex shareholders agreement that we simply would never have agreed to had we had the choice. And as you may have seen, Seed has really been the only funding party for Leap. But we always had this possibility of high multiples on revenue and forward revenue, and we were growing at a reasonable rate, not perhaps as quickly as some of the outstanding gaming companies, but Leap isn't a sort of true gaming company as in B2C. It is a B2B provider more than anything. And as I said, our biggest leverage was we had a view that a clean exit was the absolute best way to go. One of the problems with being listed is being such a large shareholder of Leap would have seen us locked in for at least 2 years. So whether we were, and it's still a possibility that there could be a listing, but I'll come to reasons why we think that's less likely. But one of the key reasons for us wanting a clean exit was this reality of probably being locked in for at least 2 years unless someone came along and bought the company as a listed company, which is far less likely than companies buying it as a private entity. Market multiples for Leap were very good a couple of years ago, as I've mentioned. But one of the big problems we have experienced at Leap is unfortunately the Ukrainian war that has broken out and displaced around 44 of the staff, which is the majority of the staff at Leap. Now, initially, we didn't expect it to be such a problem, and we had indeed advised them previously that there was quite a lot of exposure in having everything in Ukraine at that point. But again, Leap was not in a capital position to be able to change this significantly. So it's been much more of an impact than we perhaps originally were led to believe. And as a result, the reality of life is that Leap would have had to raise in the region of at least 2 to 3 million in order to grow its revenue profile to some of its peers, for example. And let me give you an example of a peer in the gaming space, Gaming Realms, which currently is listed on the LSE and has a market cap of about £75 million. For 2021, its adjusted EBITDA was 5.6 million against a revenue of 14.5, and this is significantly higher than where Leap is. So there's a number of reasons why we've been forced to be in this position with valuation. It's not something that we wanted, I can say that all of the parties that we have spoken with in terms of potential suitors are non-related parties. They're not related to us as the board. They're not related to any of our former board, and it's very clear that we state this. But ultimately, our job is to make sure that we dispose of investments for the best possible price that we can get, and we have to balance that against the risk of, companies that continue to need working capital funding. And we're not in a position right now to be writing significant checks for companies that we've already supported extremely well. So for the good of all of us, and making sure that we're keeping our shareholders' interests at all times, putting ourselves into a cash position as much as sort of £6 million would be actually a significant position to be in, given current market conditions. It's well known that after crashes, a lot of money is made investing in the sort of deep troughs of those crashes. So it would put us in a very, very strong position. But again, I want everyone to understand this is hugely disappointing, particularly given the huge amount of work that's gone into this business. I want to thank Lance for all his hard work, particularly on the finance side of things. And ultimately, the journey's not over with Leap yet, but we certainly hope to bring about a conclusion during this year, and that is the goal. At this point, I'm going to hand over to Lance, who's going to cover some of the financials.
Okay, thanks, Ed. As you've heard and seen from our RNS last week, we at Seed took the decision to update the market on the change to our NAV as at the 31st of August. This decision was taken as our opinion of the valuation of Leap Gaming had reduced by about 28%, from 22.3 million at 31st of March to 16 million at the end of August. But the updated NAV also reflects deterioration of value in the listed holdings as well, which would already have been in the public knowledge, of course. The Leap movement itself was driven by M&A discussions, as Ed has spoken about, which Seed and Leap have been having with potential purchasers of and potential investors in Leap. We can't talk more about those confidential discussions at this time, but we will, of course, provide further updates to the market as and when we're able. In real terms, and given current FX rates, assuming the 16 million euro value follows the conversion of the existing CLAs that are currently in place, Seed's holding of slightly under 43.5% would be worth about £6 million, as Ed has indicated. Whilst disappointing in the context of hopeful public listings and the frequent announcements for Leap on their development, this valuation is based on real discussions with potential third-party purchasers. Furthermore, were a sale at this price to materialise, it would represent a profit of around £1 million over the total invested in Leap of 4.95 million thus far, still over 20% uplift on our cost price, despite this being a somewhat disappointing situation. Moving on to Eurox, we invested 3.2 million euros, about 2.7 million pounds, as Ed said, since July 2021, and we're currently holding this investment at 4.35 million pounds, over a 60% uplift compared to our cost. Eurox's valuation is based on real enterprise value that Eurox has been able to raise substantial new funding at since we've invested our initial 3 million euros. Juvenescence is carried again at US dollars 3.16 million, also about 2.7 million pounds, compared to a cost price of $2 million US dollars, which was then about 1.5 million pounds. So another nice uplift. This valuation again is based on past actual equity raises, and that was a Series B raise, which we announced back at the time. That price has also been used as a floor for a number of subsequent convertible debt raises. So we believe that to be a fair and secure price. Little Green Pharma is a well-traded Australian ASX listed company. It's valued on a mark-to-market basis. This is less than positive at present. The share price has taken
a bit of a hit with the current market price and FX bringing the current value to about £1.3 million versus our pound cost of investment of about 2.5 million. So we're down on this one a bit. This said, and as Alfredo will tell you, as with our own stock price, we do not believe that the current market price is a true reflection of the underlying value of that company. Northern Leaf and Southwest Brands are both investments in convertible loan notes. They both got future maturity dates, January 2023, and we see no obvious reasons for impairment with them. So they're carried at the value of principal, £600,000 and £500,000 respectively, plus interest accrued. Moving down to Invenium on the sheet there. Invenium is both a legacy asset for us and it's distinctly non-core for us now. It arose as a result of the disposal of the failed investment we had in Factor. Whilst Invenium is still a young company with much to do, we're pleased to see our small equity holding now has an inferred value of £635,000, up from about £250,000 when this was restructured from Factor. The valuation again is based on actual price per share advised confidentially by Invenium as having achieved in capital raises since our admission as investors. And obviously this is a small consolation against the £4.8 million that we had invested into Factor in 2016-2018. However, we are pleased to see some potential of recouping monies from that original Factor investment. Clean Food Group is again valued on real prices per share achieved in capital raises. This time it's a 10 times multiple on our original £46,000 investment in March of this year, which was written up to £460,000 in July. And in July, we also invested another £125,000. So our holding value is £585,000 against a cost of £171,000. Portage, as Ed's spoken about, it's another traded stock. It's NASDAQ listed in this case. It's mark to market again. Our cost price was $10 a share. That was adjusted. They had 100 to 1 share consolidation, but the adjusted figure is $10 a share. And we've sold shares at various times at a profit to this price. We're now left with 37,623 shares there, roughly 29% of our initial holding. That's got a market value of $290,000 US at 31st of August. We will continue to sell those shares when circumstances allow and as cash flow needs require. And of course, we aim to sell above our cost price if at all possible. Moving on to UMAR, from a price performance point of view, it's been a disappointment in terms of poor market performance and illiquid markets. And whilst we perhaps would not have chosen to have UMAR listed on the CSE or Aquis, those weren't our decisions. They were rightly taken by UMAR's management, and those are things that we have to live with. Currently, the market price is £130,000. That's against an original cost price of 1.1 million. And we also rolled the original investment we had in UMAR, another legacy investment, into UMAR. All this said, we do believe that UMAR has potential to see a higher price achieved in the future, although at this point it would be hard to predict that would exceed our cost price, unfortunately. Moving on to Cytec, it was a small speculative investment of £175,000 in a CBD company that was set for an RTO. Subsequent to our commitment, the market conditions changed quite abruptly. CBD listings quickly fell out of favour, and the RTO that Cytec had lined up fell. This and subsequent developments with the valuation multiples that we've seen on CBD companies has led us to review the carrying value of our convertible loan in Cytec and assess that that company is unlikely to be worth the 15 million enterprise value conversion that the CLM will convert at later in 2023. And on the back of that, we've taken the decision to impair the value of this investment to below principal plus interest and valued at 110,000 at this point as at end of August. We will be reviewing this in September and again in March, and further adjustments may follow. Finally, and sort of looking at the little chart in the corner of the slide there, I'd like to comment on the increasing discount of our market price to NAV. Historically, this is varied between occasional premium situations and discounts of between sort of 17 and 45% in the period since the beginning of 2019. It's unprecedented to see that discount now as it is above 50%. In fact, actually, based on today's price, it's more like 64% discount. We can only assume that this is a reflection of the malaise in the general market for VC stocks, and also the current uncertainty around the situation with our largest asset of Leap. And we hope to be able to at least clarify the Leap situation in the coming weeks and months. I think that's all I can say on this chart. I hope you found that useful, and I'd like to pass over to Alfredo to enlarge a little bit on both the cannabis and CBD stocks, and to also talk about the markets we're involved in general. Over to you, Alfredo.
Yeah, I am here. Perhaps we can move to the slide about cannabis. So I will start anyway, and yeah, so as Lance already signaled when speaking about Little Green Pharma and Yuma, cannabis stocks prices have been coming down during the past year or so, and this has happened across the sector to a large extent due to poor liquidity and negative sentiment coming from North America, with the lack of reform at the federal level in the US affecting the sector globally. But it is important to emphasize that share prices going down should not be seen as a reflection of the markets in the countries where our investee cannabis companies operate. Cannabis continues being a growth sector with ever more jurisdictions accepting medical cannabis, and with the ones where there's already access having growing markets. And now speaking about what I believe is our unique setup, I think it's good to say something that is probably not as well known as it should be, and it is that we have exposure through our portfolio companies to two of the leading exporting countries in Europe when it comes to cultivation. This is through Little Green Pharma in Denmark and Urox in Portugal. And this is in addition to Little Green Pharma's facility in Australia and Urox manufacturing capabilities in Germany. Recently disclosed data by the German government shows that the country imported almost 21 tons of cannabis in 2021, and that's almost double the amount imported in 2020. And what was very interesting to see was that Denmark was the #2 exporter to Germany, behind Canada, and Portugal was the #4 behind the Netherlands, which was the third one. But both Denmark and Portugal are increasing their exports more rapidly than Canada and the Netherlands. So I think we can say that we are well positioned for that growth in the European medical cannabis markets. And speaking specifically about Little Green Pharma, it continues being a market leader in Australia, with Australia being one of the 3 largest medical cannabis markets outside North America, together with Israel and Germany. And its EU GMP facility in Denmark is ready to export to any of the most stringent jurisdictions. And it's not just me saying it. It was recently demonstrated when the company won the latest Italian supply tender, while a multi-billion market cap competitor of LGP got disqualified because it was not able to comply with all the requirements. So again, we can say that LGP is well positioned in Italy for future larger tenders as that market continues to grow. Another market, or potentially big market in the future in Europe, is France. And in France, LGP is currently one of the only 4 primary suppliers of the current trial program. And hopefully that experiment will be transformed into a real market next year once it is over. And this is another country where LGP is very well positioned for future revenues. And speaking about Germany, which is, as many of you know, Europe's largest medical cannabis market, LGP has in recent months announced several white label supply agreements with leading German importers. These deals mean an aggregate potential value of up to 35 million Australian dollars over the next 3 years. So this is just in Germany. And in terms of past revenue, LGP's revenue for the 12 months ended June 2022 was about 15 million Australian dollars, which was more than double the $7 million they did on the 12 months that ended June 2021. and this despite increasing competition. And also, while rapidly growing revenues and despite rising costs due to inflation, the company was able to reduce its operating costs 30% quarter over quarter during the past reported quarter. With this, they meaningfully improved their cash flow from operations. And in terms of share price, we are obviously concerned about the decline in the past months, and we don't believe it's a fair reflection of the value of the company. However, seeing things in perspective, and despite the share price decline, LGP, it can be said that has outperformed the cannabis sector. And this can be seen in the graphic here with the green line comparing LGP with some of the most well-known cannabis ETFs, both passively and actively managed. And as you can see, there's a high correlation of LGP's price with the North American cannabis stocks, despite very different business models. But LGP's performance since our investment has not been as bad as the one of any of these ETFs. And I know the graphic is quite small, but you can obviously see it more clearly if you go to Yahoo Finance or any similar data provider and do the comparison on your own. And then speaking about Eurox, our other larger cannabis investment, the company is well capitalized to pursue its business plan with solid investors beyond seed innovations. Its Portuguese grow facility is now ready, so the final license is expected in the coming months. The company is undergoing a rebranding into Avextra, a name that management believes better reflects its pharmaceutical focus. And it continues doing research and development to have future product lines that differentiate the company in a market that is becoming increasingly competitive in Germany. I'm talking. And an example of this is the research that they announced they are doing with inhalation devices. Perhaps also worth mentioning about Eurox that its minority investment in the Integral Clinic in the UK is now seeing some good traction, which is obviously good for Eurox as it, among other things, provides the company with valuable data coming from a company that is directly treating patients. And to finalize this part of the presentation, I think it's worth mentioning that we are not just a cannabis-focused fund. We've invested in cannabis in the past because we see it as a growth industry with plenty of opportunities. But as our recent Clean Food Group investment shows, we are not limited to cannabis in terms of future investments. As the world changes, we want to continue providing individual investors with the opportunity to have exposure to early stage deals in nascent industries that are poised to improve the world. And I think it is a palm oil substitute would be a great example of this that I am saying. With this, I will hand it over to Ed again.
Thank you very much, Alfredo. That was very useful. I think in terms of wrapping up, there's a few more slides to look at, but I think I just want to say I hope that this presentation has helped address a lot of the questions that have been asked. We are going to continue to try and ask any additional questions. Unfortunately, I'm seeing a few questions come through that are still a bit confused despite having answered these questions, but again, we will do our absolute best to do that. Again, we've covered the very difficult market conditions, but again, I think we have to look at the positives here. We've got a really strong investment case still. Yes, everything is very beaten up at the moment. There's no getting away from that. That's why we've tried to be very transparent and honest about this. However, we still have nearly 18 million pounds of value in this fund. And of course, we feel that it's at its sort of most beaten up right now. So we don't necessarily believe that if we sat and did nothing to these investments, that there may still be growth, but certainly that's not going to be the case. We're going to work extremely hard to make sure that we can add every ounce of value that we can to them. As I said, around 18 million pounds, of which nearly 12 million pounds is nothing to do with our largest asset, Leap. So that's, again, about over 5p, close to 5.5p of asset value that is not connected to Leap. We still have very fast-growing assets. Clean Food Group's a great example. Invenium, believe it or not, is a great example. We're not in any way suggesting that we're going to be getting back to the money that was lost on Factum, but it's certainly a great improvement on where things were. Eurox, as Alfredo has just covered, is extremely fast-growing. LGP, despite its unfortunate situation being a listed company right now, has also had a tough time. And Juvenescence continues to quietly move along in the background and build as a company in a sector that is really very interesting. And we're still going to be looking at investing in other opportunities. We look at anything from 10 to 100 investment decks in any given month. There's a huge amount of work that goes into this, and we're going to continue to do that. There's been some questions about investments that have been made in terms of related party over the years. And I think if we address a couple of the case studies here, you'll see that it's actively a strategy that works. When you look at EMAC, which was a related party transaction, both which included Jim Mellon, Lorne Abney, and myself in that, and we were able to deliver real cash returns. Similarly with Nuvera, Jim Mellon and Lorne Abney extremely invested in that and brought it to seed, and it made an exceptional return for shareholders in a short period of time. So that is why there is a connection often between the board, or some of the board, and the things that we invest in. And by the way, I should add, these opportunities are often very, very oversubscribed, and we're getting a decent piece of it because of the involvement of the board. As I said previously about legacy investments, we've had a lot of these to deal with, and there's still some very good companies in there, Juvenescence being a prime example. But we do have a history of delivering real cash returns across the portfolio, across certain elements of the portfolio. Of course, there will always be opportunities that don't go so well due to specific industries, due to the market. That is the nature of fund investment. We continue to support great businesses, and the growth will come. As I said, we're now closer than ever to being masters of our own destiny as a board, with legacy assets near sale. And again, there's going to be a lot of opportunity off the back of that. I just want to wrap this up by again thanking everyone for joining this call. I think if there's any further questions, we obviously have our PR company, St. Bride's, who you can submit questions to at any time, and they will endeavour to make sure that we see that and come back with some answers, if it's an appropriately sensible question and something that we can answer. As Ian very correctly said at the beginning, there's a lot of stuff we can't answer. That is the rules. We abide by those rules, and we're never ever going to not abide by those rules. That's how we do things. Again, thank you to the shareholders. It's been a tough time. We are genuinely believing in what we're doing here, otherwise we would not be doing it. I want to thank Alfredo as well for his hard work. And I believe we actually have a lot to look forward to, and there's a lot of value yet to extract out of this portfolio. Once again, thank you very much, and we look forward to better times.
That's great. Thank you very much indeed. And as the board has said, all the questions will be made available post today's presentation for their review. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the board of Seed Innovations, I would like to thank you very much for attending today's annual general meeting, and may I wish you all a very pleasant afternoon.